Hi everyone and welcome to this YouTube channel. In this video, we are going to talk about the crypto industry just had one of its worst days ever. So before starting this video, please like this video and subscribe to our channel for future updates. Bitcoin and other cryptocurrencies fell sharply as investors dump risk assets. A crypto lending company called Celsius is pausing withdrawals for its customers, sparking fears of contagion into the broader market. Crypto has had a brutal first half of 2022, but few days have been this bad for the industry that's built itself up around digital currencies. On Monday, trading platforms halted withdrawals, companies cut jobs, and panicked investors dumped their holdings, dragging the market cap of crypto below $1 trillion, down from $3 trillion at its peak in November. Bitcoin plunged to an 18-month low, falling below $23,000. The most valuable cryptocurrency tumbled by 15% in the past 24 hours, while Ethereum, which is second to Bitcoin, fell 17%. The sell-off comes as investors rotate out of the riskiest assets due to macroeconomic headwinds and rising interest rates. But it's worse than that. The action on Monday showed a fundamental mistrust of cryptocurrencies and the platforms that support them. What was already a deep downturn started to look like panic selling. The Celsius contagion effect. For weeks, concern has been growing that Celsius, one of the more popular crypto staking and lending platforms, is in the midst of a liquidity crunch. Celsius offers users yield of up to 18.63% on their deposits. It's like a product a bank would offer, except with none of the regulatory safeguards. Celsius Cell token dropped from over $7 to about 33 cents in the last year, and Celsius is the biggest holder of the token. Meanwhile, the company's $26 billion in client funds has more than halved since October. Celsius had previously admitted to losing funds, though it didn't specify how much, as a result of the $120 million hack of decentralized finance platform Badger DAO. Early Monday, Celsius shocked the market, announcing that all withdrawals, swaps, and transfers between accounts have been paused due to extreme market conditions. In a memo addressed to the Celsius community, the platform also said the move was designed to stabilize liquidity and operations. We are taking this action today to put Celsius in a better position to honor, over time, its withdrawal obligations, the memo said. Celsius effectively locked up its $12 billion in crypto assets under management, raising concerns about the platform's solvency. The news rippled across the crypto industry, reminding some of what happened in May, when a failed US dollar-pegged stablecoin project lost $60 billion in value and dragged the wider crypto industry down with it. Crypto from CNBC Pro. Binance pauses Bitcoin withdrawals. Binance also hit the pause button on Monday. The world's largest crypto exchange halted Bitcoin withdrawals for over 3 hours, due to a stuck transaction causing a backlog. Although CEO Changpeng Zhao said the fix would only take a half hour, he later amended his estimate, saying it would take a bit longer than initially anticipated. By about 11:30 a.m., service had been restored. A batch of $BTC transactions got stuck due to low TX fees, resulting in a backlog of BTC network withdrawals. Zhao assured customers that all funds were SAFU. That's a reference to the Secure Asset Fund for Users, which was set up by Binance in 2018 to protect users' holdings. During the withdrawal outage, Zhao tweeted that it was still possible for holders to take out their Bitcoin on other networks like SEP20. Layoffs ahead of crypto winter. Zhao assured customers that all funds were SAFU. That's a reference to the Secure Asset Fund for Users, which was set up by Binance in 2018 to protect users' holdings. CEO Zach Prince said in a tweet that BlockFi has been impacted by the dramatic shift in macroeconomic conditions, which have had a negative impact on growth. It's becoming a familiar theme for companies in the space. Late last week, Crypto.com announced a staff reduction of 260 people, just 7 months after the company gained naming rights to the arena. That's home to the NBA's Los Angeles Lakers in a $700 million deal. Earlier this month, Gemini said it would be laying off 10% of its workforce and warned that the industry is in a contraction phase, known as crypto winter. Nothing going right for the currencies or the companies that deal in them, CNBC reported. The entire crypto industry was riding the high waves in November last year. The most popular cryptocurrency, Bitcoin, reached its all-time high valuation of $68,991. Crypto.com, an app to trade cryptocurrencies, had secured rights to naming a sports arena in Los Angeles after itself for a whopping $700 million price tag. Even as the prices of cryptocurrencies began to drop in the following months, another crypto app spent $14 million to float its quick response QR code on screen for 1 minute during Super Bowl in February. Now, the Bitcoin is languishing at $22,000 while the companies are acting to secure themselves for an approaching crypto winter. As the world returned to the pre-pandemic normal at the beginning of 2022, cryptocurrencies began to lose their sheen. Market valuations were already shrinking when the U.S. Federal Reserve announced its most significant interest hike in decades, which sent cryptocurrency values tumbling down last month. Bitcoin was barely managing to hold a position when cryptocurrency companies began tightening their purse strings to prepare for the tough times ahead. Coinbase, which splurged millions to showcase its QR code just a few months ago, went soft on its hiring in May but put a complete stop as we entered June, The Verge reported. The company had also launched an NFT marketplace in May but received a lackluster response, and the company's plans to add 2,000 employees this year alone came to a grinding halt. Though unconnected, popular trading platform, Binance, also announced a withdrawal halt. The company later clarified that the halt was temporary and due to a technical issue, which was resolved after about 3 hours. But this was enough to panic investors into dumping their holdings in Bitcoin and looking for safer havens. Bitcoin prices slumped to an 18-month low after they lost 15% of their value. Ethereum was a bigger loser with a 17% loss in its value, CNBC said in its report. Overall, the market cap of the crypto industry dropped below $1 trillion, less than a third from its November peak, making it the worst day in its history. All hell broke loose on Monday when Celsius, a popular crypto platform, announced that it was halting all withdrawals, swaps, and transfers due to extreme market conditions. The liquidity of the company has been under question in the past, but by locking over $12 billion in crypto investments, the company sent shockwaves through the market. Thanks for watching.